Hey guys, welcome to vlog number 7, and boy do we have a doozy. Last week went crazy, right guys? Let's take a quick look at the charts here. As you can see, we are way up here. Like this, our QQQ play before last week, we were gonna close. So that one I was hoping would close out last week, but did the opposite. Our SOXL, that really fell. Now, if we take a look at SOXL, look at this drop here, guys. This is nuts. This isn't normal for ETFs, okay? But it does happen. All right, so we did fall below our insurance line here, okay? So I kind of want to point out why we buy this insurance and how this works, since we still do have quite a bit to our 21 days expiration. So let me get this pulled over here. So our SOXL, we see our 21 days expiration is August 2nd. Okay, so we still have some time on both of these plays, which is good. So time is in our favor. All right, so let me just quickly explain this the way that I kind of understand it. I guess not the way that I understand it, but the easiest way for me to explain it or understand it. Okay, let's call this insurance. All right, so let's say that you purchased a vehicle, all right, and that vehicle is worth X amount of dollars, all right, and you want to make sure that if for whatever reason, if you get in a car accident, that vehicle can either be repaired because you really like that vehicle, or if it cannot be repaired, you want to make sure that you can get the money back that you spent. Okay, so with these puts that we have here, so this 56 strike put that we sold, the person that bought this contract, they own this stock more than likely. Okay, or they're just like us and they're doing a credit spread, which is probably the majority, because most of these aren't going to get assigned. Most of these option contracts are getting bought. But let's just say that this person bought this, right? So they own this stock. Let's say they bought this stock up here. So let's go a little bit closer. Let's say they bought the stock at $60, okay? And they said, you know what? I just want to make sure, because I really do like this stock and I do see that it's going to go up. But if for whatever reason, if it drops down to $56, that's the most I want to take as a loss on the stock. So I'm going to purchase a contract, a put contract that says, hey, look, if this stock goes down, which it did, down to $50, and I don't think that it's going to come back up, because now we're closer to our expiration. We have tons of time. If it goes back down, if it goes all the way down, I want to be able to get the most out of this. So I can execute this contract here and I can sell off my stock that I purchased for $56 a share, you know, versus the 60 that I bought it for. So yes, I'm losing that $4 per share there, but I'm not losing all down here to $47. That makes sense. Okay. So the reason that we're not really concerned right now is this stock trends up. I mean, this is why we buy ETFs. ETFs go up, all right? So even though it dropped straight down, which isn't normal, we know it's going to come back up. We have a lot of time to work in our favor for this stock to bounce back up and for us to take a profit, okay? Now, if it doesn't, you know, that happens, but it doesn't normally happen like this. So if we take a look at what's going on, there's a lot of news that's going on recently, you know, with the whole Microsoft outage, you know, that really affected the shares. We have all these people now that Biden stepped out that are backing Harris for president. So there's a lot in the news that's going out. That's affecting these stock prices. So it's a very interesting time. But long story short, we're not worried at this point. Okay, if we take a look at our QQQ play, it came down Not as much as SOXL, okay? It dropped, but we're starting to move back up now that Biden stepped down, and things are starting to level out, hopefully. But there's just been a lot of uncertainty in the market right now. A lot of uncertainty with the world, a lot going on with the presidential race and all that fun stuff. So it's affecting all these stocks, okay? Another main reason that we buy ETFs is because with stocks, so if we look at SOXL, if this was a normal stock and it dropped down and it had dividends on it, you know, it could get assigned very quickly as it dropped down, okay, because of the dividends that this could be, dividend arbitrage or whatever it's called. But there's other factors that could make this close against us. All right. So as you can see now, we're starting to move back up. So now we are above our insurance line that we bought here. So that's a good thing. If we take a look at the candles, which I know I say don't focus too much on the candles, but this is pretty interesting as we can see how this stock has been going. I mean, this was a big fall, and then we had from here to here. That's huge, right? And then we had a push back, and then the fall, and then it's starting to push back up here. So all in all, guys, a very interesting week to not be here, being at the restaurant. It's a lot running a restaurant, but I'm glad to be back. I just wanted to share that with you guys today. Yes, it's going against us. If we look at our price, we're back down to $2.82, which is still crazy. It was at $3. This one, like I said, we were at like 60 cents, I want to say, at one point last week, and now we're back up to $1.15. But this is why we buy our options 45 days, as close as 45 days out as possible. Okay, guys, so we have time in our favor. So there's still time premium in these stock options that we have. So again, we'll look at this, we'll keep watching this, but if we hit the August 2nd day's expiration, that's when we'll start really trying to figure stuff out here. But all in all, guys, very interesting start to a Monday. Big drops, but it looks like we're coming back up, so it'll be interesting to see how we end this week. If you have any questions, which you may, I don't know if I explained stuff clearly enough, but any questions, just leave them in the comment box. I'd be happy to answer them any way that I can. But we're just going to continue to watch these guys, you know, and that's another risk with when you're trying to grow a small account. You know, you don't have really much wiggle room for taking big losses like this. But as we set this up and I show you guys, you know, how I'm setting it up, it puts the W more in our favor, puts that I don't know, the balance in our favor versus taking big losses if we get a shorter days of expiration. So again, I appreciate you guys watching. I appreciate you, and I will catch you next week. Hopefully this will be way up here, and we can close out on these and take some more profit, and then we can open up some more trades. But as always, have an awesome week, guys. Thank you so much. Talk to you soon. Bye-bye.